don't nobody wanna die alone, but that's the road that we all on. I can never ever sell my soul, so I know I'ma live long. I know I'ma get on, I know it all goes on. I don't wanna hold on, but I can't let it go for too long. I know I gotta go hard, till I'm down in the tombstone.
What's up guys, hope everyone is doing well. In today's video, first off going to be going over some technical analysis, and then after that I'll go over some news with respect to the FTX situation, also being relative to Black Swan events. So I'm going to go over what those have traditionally been thought of, then give more of my opinion and what I think they are, or at least a lot of them are. And then after that I'm going to go over some New York Stock Exchange analysis, which ties into Black Swan events. And then lastly, I'm just going to go to the websites and then the white papers for each of the altcoins that I go over in this video. As I said in the past, it's been about a month since I uploaded my last video, but this video is going to be a first video in a series where I go over a number of altcoins, and then I go over their websites and there's certain things on their white papers just to give a more of an in-depth analysis of it, and things along that nature. But to go ahead and get it started here on this 2-hour chart for Bitcoin, what I mainly want to get across is so once we sank down from 21,000, we made pretty much this M pattern, double, triple bottom, I suppose, right here. But we can see once we've made our lowest low right here at around 15.4 thousand, so far we've turned it up with respect to this green range right here, and this ascending green range. We had this drop off point right here once we got done consolidating within this symmetrical triangle, this red formation. Then we went back up, and then back on Wednesday, which is, I have these fractal patterns right here because I saw what it was looking like, and this looks similar to me, so I assumed we probably would go down. That we did. So far we're just kind of continuing to go sideways in the same range. We are coming back to, again, touch this same ascending diagonal range. So realistically what we need to see, I think, for the best case scenario, is continue to go upwards, eventually meet this moving average right here, and not get rejected from it, continue to go higher, assuming that the lows we set so far around 15.4 thousand is indeed the bottom. Again, if we continue to go lower from here, going back to, I guess the first time I showed this was about a month ago, but this is just the general range from around 13.4 to 11.3 thousand, approximately 12,000. I don't think it'll go too significantly lower than that. If so, it may go to around 10,000. But outside of that, here on the 2 weekly, I wanted to go over this RSI. I've shown this with respect to having this, I forget the name of it. What's it called? Inside pitchfork. Right here, with respect to the bottom in 2015 to the high of 2017, end of 2017 to the bottom of 2018. Each time, also with respect to, we can see here going along this inside pitchfork, this dark blue line has been pretty much just decreasing over time, with the deviation downwards around 9.64%, just pretty much precisely, just about as accurate as you can get it here on this. This is the Bitcoin index chart. It's a little different on the BLX chart, which I'll go over that after this one. But for, going into that, if we do the same thing, we carry out around 9.64%, or I suppose on the dot. It lines up with the next bottom, given these line up each with the bottom. So our current one, assuming, given we're seeing a bullish divergence right here, that's the RSI set the lowest low back in June, and now we're seeing a more significant bullish divergence right here, as you can see with respect to the price and RSI, which brings me to so this pink vector candle that we see here with respect to the RSI. I can go to it. I've been using this for a while, but you go to it, just make, at least on this 2-week chart, lowering the number will just better increase, kind of more so show like whether or not you want to just kind of have them print towards the tail end of the bear market. Typically is what they'll do, as you can see for each of these bottoms here on the chart. And each time we've gotten on this 2-week chart a bullish divergence as well, which again, as I said, we're seeing right now. And so you take it back to 16 of these inputs that I'm using. This is the only one that it highlights, as you can see on here, pink like that, going all the way back to the beginning. So, and there's no significance outside other than the fact that this is, I feel like, confirming the bullish divergence that has played through here, and I think this is actually the bottom we've set, given this was I think it was the lowest close and the lowest wick. I also adjusted this pi cycle indicator. Now it's on top of this same candle as well. And again, we are getting that bullish divergence. We've already deviated as much as I believe we should. And we pretty much are in just a general fantastic retracement zone in terms of this price. Pretty much finding still on this 2-week chart, we never actually really dug into the actual like closing of the candles, the body of the candles, looking back at the previous cycle high. So I mean, that's also just good to see as well. But what I wanted to go over here on this chart was, so as I said, the Bitcoin index chart has more of a precise measurement, whereas this one, the first one measured around 8.65%, this one 9.8, and then so what I just did for this third one was I just put all three. So I put the 9.64, which was on this previous chart, and then the 9.81. I just approximated the first two that I said on this chart, and then it created a pretty much just a confluence zone right here. Also, these diagonal white lines are with respect to each of these previous lows we see. First two on this RSI again hit the upper line. This one went down to the second line, creating the range. Again, as I said, creates an overall range right here from around September 2025 to September 2026, so around a year-long range, which does nicely correlate with what I've been saying after we end the upcoming bull reversal. I believe is what we'll be seeing, something similar to what we see on here, going up towards around approximately just 242, just 250,000, give or take, like $30,000 or so. Towards the end of next year, and then we'll enter a bear market. I believe we'll set the first low of that bear market, which is going to be correspondent to how things are, like in terms of the price structure, behaved from starting in right here in December of 2013 to the high of 2017. We'll see, I believe, a similar movement in terms of price with respect to that. I don't think I have it on here. So which brings me to this chart. So we'll see we'll bottom out here again, as I said, around September 2025. Takes us out to nearly about leading into like the pretty much the end of 2026 is when we'll get that bull reversal, which again, as I said, lines up pretty much right here. And also, as I believe I've shown this in the past too, this we're pretty much reaching the tail end of the bottom range, and this is with respect to the halvings, as you can see on here. 72 bars from each of these actual halvings. The second dotted lines are the actual halvings. I put ones, I think it's like 7 bars before here, again on this 2-weekly chart, before it to create a range. Also what I found was pretty interesting was this first one back here, which just again, this would be a phase 2 movement. So the high we set in 2013 to the low of 2015 up to the high of 2017 would be phase 2 within one cycle. The entire cycle again would be starting here from 2011 and ending in 2017. We see this W movement into a lightning bolt. Again, it's just kind of just prolonged downtrend. Then we move upwards, kind of like a valley, I suppose. Then again, we see a W right here, but this time it's been extended over time. The gains aren't as much as the previous cycle as well. And so far, I believe what we'll be seeing is pretty much this second parabolic thrust of this lightning bolt pattern that we saw back here, which is a part of the first phase right here in this first, or technically the second cycle we saw right here. Again, the point that I was trying to make was that this one lasted around 16 bars right here, and then going out to the next one, which would correlate to the next cycle. This one's 32 bars, so that's just double of it. And we can see this first bottom again, so this would be phase 1 from 2017 to 2024, assuming this ends up playing out according to how I've seen it. But if we take a look here, we see the same doubling pattern of 9 right here. This is pretty much the second overall bottom right here. This is kind of like an intermediary bottom we saw for the COVID drop. Technically, if we look at the previous cycle, what correlated with that would be the downside we got right here back in March of 2012, which is interesting because this happened in March as well. This was just more, it was more exaggerated of a drop, given, as I said, when the cycles are going on in time, they're going to decay. Bear markets will be prolonged, bull markets as well. Just gains won't be as significant as they were in previous cycles or as they were in the past. But again, the price target would be around 242,000 approximately, and then by the end of this decade, I believe maybe 2031 or so, I don't think it'll push any higher than around 1.6 million, according to this The last thing I wanted to go over here for Bitcoin was this yearly chart right here. So I have this range drawn right here, this increasing diagonal range of these black lines with respect to this wick that we set back here for this first major candle we had, and then I connected it to this bottom we set right here for this first pink candle. Then I just copied it, moved it a little bit higher to connect to the corner of this other significant bullish candle. And then this purple trend line is drawn from this low, again same low, to the corner of this significant bullish candle. As I said, what I find interesting is that this also further would line up with support going into the next phase, the third cycle, second phase that we would see, this bottom leading us into the range around 2025 to like end of 2026 or so. Which again, we'll see this what we got back here in 2015. You can see we won't touch this trend line within the current phase that we're in, but we will in the next phase, which again, as I said, is what lines up with this one back here as well. But to go ahead and get to the altcoins, the first one is Fantom. Again, this one's, according to the way I see the market structured, could possibly be around a 2000x as it did the last cycle from March to November. Assuming we don't see a bearish scenario play out and the market doesn't continue to go significantly lower to these three price targets that I have down here, go higher, eventually we'll break, I believe. See something similar again to this, not exactly like it, but if I had to guess, we'll probably consolidate somewhere more up in this range if we do stop, given the price build up back here and not really too much right here. Once we break out of that, again, the first price target, if we don't make the double top, and what I mean by that is Bitcoin went, so I made a top in March and then November, obviously, from 64 to around 69,000. I'm not sure, according to the price harmonics and the way it's structured, if we'll see that double top again, which essentially means that either Fantom will go to around $64 up to around $100, more around like $50 to $100, or we do see that double top play out again, or if the altcoins just overextend without Bitcoin making those two tops, then it could go as high as I said, around like $420 in the past or so, $400 in general, lining up with the 1.618 with respect to this Fibonacci retracement, which is just with respect to the entire bull market we saw in the past back in 2020. Here for Doge, again, similar idea here where I created this range right here. It's ascending range. Trend lines are drawn with respect to this wick right here, and then this wick right here, and then this one right here, and also right here. And then again, it's just trying to point out how this was March when we began this build up to the bull run. We're seeing a similar, it looks very, very similar anyway. As we see our bottom, we have our first upwards thrust, which would be kind of this action right here. And then we see a more major spike right here, go down a little bit, see some tension release towards the upside, similar to how we did right here. So going back to it, we're pretty much similar to August of 2020. If this plays out how I'm seeing it, we'll continue to stagnate in this general area, probably going no lower than we've already set, if I guess around like 7 cents or so. Eventually, once we break out, we'll top out again, and even for Fantom as well, just around the second half of next year. For the ones that I talk about that may have a double top, that would extend more towards the 3 or 4 months into 2024. Dogecoin didn't necessarily really do that. It went up when Bitcoin went up the first time. If you see in November, it didn't make a second higher high like Bitcoin, and you saw Fantom do back here as well for this last top it set. First price target in general, just think of Dogecoin going to $1 is inevitable at this point, so just always look out for that. And after that, I would say just around $2 to $5, around that, like $10 to $12. But I do think it's not at all impossible for it to go to $28. It wouldn't be worth more than Bitcoin, especially if it tops out when Bitcoin is at its highest high. But just in general, these three ranges should be, if I had to guess, where it's going to go within the next year, if I had to guess. Here for Theta. Again, if we go lower for this one, which I didn't go over for that for Dogecoin, which I don't think it will happen at this point. For price, we could go just below a penny, or almost to around a third of a penny. Here for Theta again, if we go any lower, around 76 cents or so to as low as 23 cents, we are printing a bullish divergence here as well. So that's also nice to see. The price target again, $400, again, similar time frame in next year. This one doesn't have the double top. Realistically, I mean, all these are really kind of just depending on Bitcoin at this point. On here, I just have this meant to show how we could likely just be building up convergent consolidation towards along this center point until we finally break towards the upside. We'll see how we behaved during this bull run we saw right here. What we saw right here for the most part. We were in this upper range. We had these two drops, which didn't even touch the lowest levels. Just kind of indicate two good times to buy within, which would be this first major bottom and this kind of halfway point between the bull market previously. So again, we just need to see the stock RSI, and that goes for all of these. For the most part, all these will look the same. Even here on the indicators, we'll see this on all of these as well. If I go here on Dogecoin, again, we'll just see similar. We set the lowest lows back when we first started the bear market. It's been pretty much having a bullish divergence up until the point where it's finally going to switch that momentum towards the upside. Again, if we go back to Fantom, we'll see the same thing here. This was the lowest low we set back in November of 2021, or my bad, around December or so, which lines up with that right here. So the first relative low we set once we made this double top. Ever since then, just been converging towards zero until we finally release momentum towards the upside. Here for Matic, as I said in the last video I made on this, we are still following these M patterns you see back here pretty nicely. This M that we made along with this yellow path right before we got this bull run. Seeing similar action right here. We are deviating a little bit from how we performed last time. So we might continue to go sideways more like the center pattern, or we might see some more upwards action. But in general, I don't think it'll go any lower than like 50 cents at this point. If it did, it would have to see a pretty significant drop down to, I mean, around 2 cents or so. Again, we'll see the same thing right here for the MACD converging upon zero once we ended the bull market right here with this final top in the double top. And then it set its low slow in the MACD right here, like right when the bear market began pretty much. See this on the stock RSI. When I'm pointing out these green paths, is we see this M pattern before, again on price, pretty much what I already pointed out. Before the bull market began, we're seeing similar movement right here as well. And we also saw one, like an M pattern right here as well in between these. So we see this M right here, then we just stagger off a little bit as we go down, and then this pretty much this first upwards action in this last M right here was just lined up with this upwards movement we saw on the price above it. Here for XYO, this one has behaved the most different with respect to Bitcoin out of all the ones that I've seen. Again, which I forgot to go over. The price targets for this are around $120. If it extends to around March or so, around like $200. So in general, from like I would just say around $150 to $200 or so. This one's behaved the most different from most of the market. I think this was going to top out earlier. What I want to go across on here is, first off, this yellow pattern that you see. So I see a similarity in the way the price behaved right here. It's also kind of just in a general ascending range, I feel like, as time has gone by. And I feel like it kind of just also lines up with where we could likely see price stagnate up here, and also where the top would be as well. But the yellow path pretty much represents, first off, and it's an ABCD pattern to the downside, so like a lightning bolt, as I've said. So we see the same thing right here. We make this M pattern as we consolidate sideways, basically, as at the bear market bottom, which we see this M right here. So could we be seeing this upwards momentum along with the other coins and the Bitcoin as well. And here on the RSI, it's pretty much, I find interesting, it's pretty much slowly just been going upwards over time. As for the most part, price went down back here, this is indicated pretty much the bullish divergence we saw back here before we got this major bull run we saw. But the price target for this one, I don't think it'll go any higher than around $3 or so. Again, as I said, I think this one might top out earlier, still around June or so. If we do go any lower, I don't think this one could drop any more than around 63% or so, which it's at like, around half a penny at this point. I don't really know off the top of my head how low that would go, but personally I don't think it will go any significantly lower than the 0.004, around half a penny that's gone so far. If it does play out with this, as I said, this could likely spike pretty soon. Also the MACD, we'll see the similar behavior down here. Once pretty much the bear market began, we started seeing a bullish divergence, just indicating at some point in time, that point in time when momentum is really going to shift and reverse for the bull market, or a bull market reversal to actually begin. Here I have the XYO USD pair pulled out, which I guess I can actually go down to see. Let's see. I mean, I don't think the market would even go down 67% at this point. I mean, I think 32%. Bitcoin going down like 27% brings it down to like 12,000 or so. So I mean, we could see this go to around a fifth of a penny or so, if it even went down any lower than this. Here for VeChain, here we see these M patterns leading into this March crash, again into the bull market. We see two M's right here that I've drawn out with these yellow paths once more. We see an ABCD pattern right here breaking down this M pattern further. We see a 5-wave move to the downside right here. We're seeing a bullish divergence right here with respect to this last M we've made. Again, we'll see, kind of just you see how the price is converging. Made it slow pretty much when the bull market or the bear market began. And ever since then has been converging, as I said, upon zero. Eventually it will shift that momentum at some point along the way. This one I think will top out more around towards the end of the next year at around like $3 or so. No higher than probably like $4 if I had to guess. Here for the last coin, Jasmy. This one's pretty much the wild card out of all of them. This one hardly has any data anywhere, so I'm not really sure where it could go. But what I find interesting about it is, even just for it to do 100x, it doesn't even have to break the previous all-time high. We'll just have to go back here to this 0.618, kind of just get caught up in this relative high that we set back here. And even if it just went back up to the previous high, at least on this chart, it would do nearly 1,000x. If it goes to this highest one I've set on here, around $210, that's a 62,000x approximately, which would bring it to around like $1 trillion market value, which if it happens in correct timing with Bitcoin, meaning Bitcoin's at the most could be worth like, I think it was like 5 trillion if I remember correctly. If it goes to about the highest I think it could go, what I went over earlier, then this could definitely be worth $1 trillion as long as it's not worth more than Bitcoin. Which I believe I forgot to go over. But the lows for VeChain, if we continue to go any lower, I don't think it'll go any lower than like just shy of a penny, so 0.008. That was about really all that I wanted to go over for the technical analysis. I'm now going to go into the clip, going over the FTX situation, just over the information of what happened and what went down. I know it's been some time since it happened, so most of you may already know what happened, but I'm going to assume most people haven't seen the clip that I'm going to show. But anyways, here that is.
FTX founder Sam Bankman-Fried was the largest donor to the Democrat Party, second to George Soros, for the spurious 2022 midterms. Nearly $40 million, which reportedly came from crypto donations to Ukraine. FTX was partnered with the World Economic Forum as one of Klaus Schwab's stakeholders. FTX's founder reportedly used a secret backdoor to steal over $1 billion from the customers of the now defunct cryptocurrency exchange. But there's more to the story than Sam Bankman-Fried and a money laundering slush fund for the failing Democrat Party. The CEO for FTX was Caroline Ellison, whose father is Glenn Ellison, head of the MIT Economics Department. Glenn Ellison hired Gary Gensler to head the cryptocurrency department at MIT in 2018. And in 2021, the Biden administration nominated Gary Gensler as the chair of the U.S. Securities and Exchange Commission, who has been laser focused on gaining control of cryptocurrency. While the SEC has been routinely combative towards cryptos, they have treated FTX like family, causing many to argue that FTX was being groomed and set up by the SEC to monopolize the crypto market.
FTX was an exchange that had a bright sheen on it. It was led by a CEO that was often on Capitol Hill and being photographed with regulators and lawmakers. And so there was this sense that the exchange was very buttoned up.
Cryptocurrency has the potential to strip power from the central banking system, and that makes it a major threat. As this story unfolds, don't be surprised if this mess becomes the catalyst for government overreach into cryptocurrencies.
The Journal reporting the CEO allegedly using customer money from FTX to fund risky bets at his other company, a hedge fund called Alameda.
Many people believe that this will definitely set back the crypto industry for years.
You know, this is a tale as old as time to some degree. Some young, charismatic guy in Bermuda shorts with the floppy hair charmed the 20 best investors in the world.
Rebecca, the big question here, was this a mistake by the founders or a crime?
Well, that's a question the regulators will ultimately have to answer here.
Outside of that, again, here on Twitter, there's a few other videos that I wanted to show. Again, kind of just touching on the FTX stuff. So here is this first one.
Well, Jack, thank you for speaking with Business Insider. Would love to start by hearing some of your comments on Sam Bankman-Fried. He just said that Bitcoin can never be accepted as a payment system. You're kind of, building a product that's the antithesis of that. So I'd love to hear your thoughts about what he said.
Yeah, thanks for having me. I think, unfortunately, everything Sam said was arguably factually incorrect. Everything from the speed in which Bitcoin transmits value all the way to its use of proof of work and the viability of something like proof of stake, which doesn't make any relative sense whatsoever. Just to be clear, I think this is a very important point to make. Bitcoin in its original form at the base layer is not optimizing for speed and payments. Bitcoin is trying to allow a digital instrument accessible to everyone in the world to exist forever in a distributed, trustless manner. Bitcoin is trying to build a hard monetary asset that can be traded by enemies despite an appetite for war. And this is actually relevant in today's macro environment where we see dollars being seized by different nation states. Bitcoin is trying to replicate and build a harder, more digital form version akin to gold. And so Bitcoin's 10-minute block times and Bitcoin's proof of work are more bound to laws of physics and take in the account of laws like the speed of light, as opposed to Visa's transaction throughput. Bitcoin is bringing a digital instrument and holding it accountable to the laws of physics. And it's allowing a physical digital rock to exist forever despite market conditions. And then once you have this thing that will never go down, that's accessible to everyone, that has predictable issuance, a fixed supply, and is bound to the realities of proof of work so that it has a distributed level of consensus and trust, then you can build payment standards on top of it that make it travel at the speed of light at relatively no cost. So let me be clear. The Lightning Network is not a blockchain. And that is why it will be the superior payments network to transport value digitally. Blockchains are built to build distributed, trustless, digital instruments. They are not optimized for speed and cost. You have to build these protocols in layers. And so everything Sam said, from proof of work to proof of stake to the speed of payments, is factually incorrect. And the last thing I'll say is it is extremely dangerous that there are people that are engineering themselves to be experts by spending a lot of time and money to be treated as an expert, and then can be so factually incorrect. It is extremely dangerous. They are either acting maliciously or they are severely incompetent, but both carry the severe risk of disinformation that is tremendously dangerous, and human resource costs are extremely high with attitude and behavior like that. So that's what I got to say about that. It's just plain speak wrong.
And now to expand a little bit on what he said, I personally believe, I agree with pretty much everything he said, but I personally agree or believe that Bitcoin is, it's pretty much the rebirth of the internet in a way. It's pretty much the rebirth of a lot of things. The Gutenberg printing press, the wheel, if you think about it, I'm not necessarily saying that they're reinventions of those things, but I feel like blockchain at least has the capability to have more of a profound effect on, not necessarily profound, but a greater of an impact in terms of revolutionizing and changing the bedrock foundations of how a society intermingles with itself in terms of obviously the peer-to-peer interaction. I mean, how we communicate. I mean, obviously how we're sending information. I mean, all the things that blockchain technology can do at the end of the day. But to go ahead and go to the next clip here again with another Jack Mallers video.
Kind of exposure to what we're seeing play out.
No. Strike, myself, and Bitcoin at large has nothing to do with SBF and FTX. I mean, it's nothing other than absolutely disgusting and malicious crime. In the same way that someone can go hijack a car down the street from my house, that has nothing to do with Bitcoin either. Unfortunately, it's just an extreme level of criminal activity, crime, and fraud. However, I think a really important point to make is that the world is finally starting to realize that there's Bitcoin and there's everything else. The way I like to describe the crypto industry and blockchain is it's an arbitrage on the trend. I mean, Bitcoin is, humanity really found its stride in inventing Bitcoin. Money is the most valuable market good we have in any market. It's nucleus to a functioning society. And we made and engineered the best version of it. And the fact that there are other cryptos that have been able to come along and take advantage of the pure desire and need for an invention and technological breakthrough like Bitcoin, and then be able to sell things like Orange Coin and Pink Coin and FTX Coin, which are just vehicles to arbitrage this trend and commit violent levels of crime. It's sad and it's disgusting and it's got to stop. So it has nothing to do with Bitcoin. If anything, it should be a very expensive and painful lesson of that there's Bitcoin and there's everything else. And the last thing I'll say is there's doesn't shock me at all that FTX actually owns 0 Bitcoin. Because if you want to commit fraud, if you want to commit crime, if you want to upsell and wash trade pictures of monkeys, you don't use Bitcoin. This is a well-engineered freedom fighting tool for our species. And there's everything else it's got to stop. So the arbitrage on this trend has been margin called. And it's over. And now people can see the difference between what is a well-engineered tool for humanity and what is FTX counterfeit coin.
You have strong opinions on this, and I get that. And certainly many other Bitcoin enthusiasts, such as yourself, have said very similar things on our programming over the past week plus since we've seen the implosion of FTX. I want to get into that because it sort of speaks to DeFi versus centralized. But first, I mean, the fact that you are seeing some contagion, at least in the broader cryptocurrency space right now. It's clearly a culling that's underway. You could argue it started before FTX. It's continuing now. Does it set back broader adoption of something like Bitcoin because it's considered, for better or worse, part of this broader industry?
Sure. I mean, you could think of it 2 ways. They had to get washed out, right? You had a criminal running rampant. They had to get caught. So better catch them today than tomorrow. So in that way, we're making progress. Actual real value that's pushing humanity forward is being realized, and those that were faking it are getting in trouble. That's a good thing. But no, I've always said the biggest cost of the arbitrage on the trend, outside of the very obvious, and I don't want to dilute this, is just innocent people losing money, which is absolutely terrible and awful, and they should not have been allowed to be subjected to that. But that aside is the cost of just human capital. Is that like I'm
you're saying unequivocally Fried is a crook?
I'm not sitting next to my lawyer. I don't know what claims I'm allowed to make, but you tell me, Tyler. What do you think?
Well, that's not for me to say. I'm the questioner here.
I think the guy created funny money out of thin air, potentially washed it, borrowed against it with customer funds, and lost it all. Right. That's not legal.
Okay, cool. Well, not cool, but you know what I'm saying. I just thank you for your answer.
Sure.
Freedom fighting tool for our species. That's highfalutin rhetoric. Why do you say that?
Bitcoin gives everyone in the world property rights secured by mathematics. I mean, Bitcoin is the first monetary asset that we've been able to engineer with no natural issuer. Bitcoin has no liability relationship with anyone else. It is a guaranteed, fixed, protected monetary policy and instrument. I mean, in order to function any sort of scalable trade, which is underpins society. I grow bananas, you sell apples, Tyler. We got to find a way to exchange. Money is the nucleus of functioning human society. And we've been able to a breakthrough in computer science and engineer the best version of that is accessible to everyone and equitable for everyone. No one has an advantage. There's no issuer. Even Satoshi Nakamoto had to use energy to get his or her first Bitcoins. Huge deal. Huge advancement.
What does regulation? What does this do to? What does regulation now do to Bitcoin, given the fact that there is now a bigger risk of a broader brushstroke used by regulators, given everything that we're seeing play out in other areas of cryptocurrency?
Yeah, I mean, my take is either the SEC or an agency like it has to stop existing and admit to the free market. It's your responsibility. But if they're going to say that we will help protect you, they need to do that.
And again, I completely agree with everything he said there. And to go how he said money being the nucleus of a functioning human society, and how we basically had our stride in coming up with Bitcoin or inventing Bitcoin. And again, further tying in how I said that it's pretty much going to revolutionize the foundations of just about every aspect of our society and our interaction with each other, I believe. But outside of that, here for the last clip that I wanted to show, it's just kind of funny. I guess it's not necessarily funny, but it's just
was suspiciously, in quote, transferred from FTX wallets after the bankruptcy filing.
And you see, it's just
and there
as soon as he mentioned about the
assistance
funds being suspiciously transferred, he just
was suspiciously
has that creepy smile that you see right here. Again, this is Sam Bankman-Fried. And then what I find also funny is in the comments somebody talking about from the Kubrick stare out of Stanley Kubrick's his movies when their characters reach the peak of derangement. You can see these 4 images right here. Looks nearly identical to how it should look. Pretty much. I mean, his smile is very maniacal. But also somebody compared him to here's Emperor Palpatine, which I found that funny too. And apparently, I saw this earlier. I don't know if this is true, but at least if this ends up happening, it's amazing that he's honestly not like in jail, and the fact that or prison, I suppose, rather. But he's still, I don't know. It's a very odd situation, which I suppose that clip that I played earlier really kind of explains why this is such an odd scenario, which brings us into Black Swan events. Again, Black Swan events are basically negatively catastrophic events that kind of just spontaneously, almost naturally, really without like even like a fixed cause. Coincidences would probably be a good word for them as well, but I mean, typically they're said to, people try to erroneously explain them away, say they could have been predicted after they happen, because it's almost kind of like a hindsight thing whenever these things happen. And some of my examples that this image here gives us. So the 2008 crash, Zimbabwe's in hyperinflation in that same year. The bubble of 2001, the dot-com bubble. 9/11 attacks, Brexit. Also, you could think about like Chernobyl being one. Maybe even you could think about I know it's supposed. I mean, it happened during a war, so maybe not necessarily. But the attack on Pearl Harbor, it's just like events that kind of just seem to happen, like almost just like out of the blue. I don't know, really like a better way to describe them outside of that. But what I wanted to get more into about my opinion on what they are is like, if anyone's ever heard of predictive programming, it's basically where some form of media, whether it be like a movie, pop culture, a TV show, maybe even in like something the government shown, propaganda, I don't know, just some form of like just entertainment media, as I said, put out into the like human society. And for example, here's one which is with respect to the Titanic. This book was written in 1898. The Titanic sunk in 1912, 14 years later. This book, Futility or the Wreck of the Titan, written by Morgan Robertson. Clearly the picture is very clearly represented there. Just find it odd that things like this happen. Also, again, how this mentioned 9/11, very common thing people see, which there's stuff like 9/11 before it happened, that it appearing in like video games and like plenty of other places as well, where you see this magazine, $9, two Twin Towers basically in the background. We see the Twin Towers right here as well. This was aired in 1990, it was either 1996 or 98. Obviously, the 9/11 happened in 2001, so that's also just very odd as well. And basically what I'm saying is that a lot of Black Swan events, I'm not saying all of them are, but I think it would probably maybe be a more accurate or precise way to redefine it as controlled events in some sense. Maybe the fact that they have come to have the definition that they have so far is a reason why they're not labeled as controlled events. But that's kind of just how I see it. And to tie that into this New York Stock Exchange analysis, which I've gone over in the past, is basically starting in 1994, going all the way out to 2008 crash. You see the first cycle, I'll just call it, for lack of a better term right now, which is made up by this massive M pattern we see of 0, 1, 2, 3, and then 4. We just recently hit our 3 in 2022, which lines up with, you can see, as I said, 1994 we started. If we go to the first peak in 99 or 2000, then we go to this second peak right here, we have 2007. And then we go to this one here, it's 2014. We go over to here, so 2021 to 2022. There's a 7-year factor or difference there. Well, not necessarily difference, but every 7 years, this is when these peaks are happening. And according to this, we should see another iteration of some form of a March crash, not a March crash, but the 2008 crash. Which if we go down, which I find this kind of funny, if we go down 61.8% on the dot, that takes us to a price of 6,663.776. I just find it ironic that 777 would round up 6663 to being 4 6s. But if it went down 59.8% the last time, which I mean the general range where I would expect us to be going by around like end of next year. Well, could extend latest end of next year, but perhaps more around like halfway into next year, going down to as low as around, as I said, around $6,500 or so, up to around $7,000. Again, this is all. It's also been in the media as well, just various news outlets talking about how this could potentially be worse, which could make a lot of sense given, blockchain technology being what it is and old systems having to be replaced inevitably at some point in time, which I believe this is what this is indicative of. But if we go here to the lower time frames, we've overextended a little bit above this range pretty much. We've gotten rejected at so far since we started going down from here, tapering off back in January of this year. But we continue to get a bearish divergence as we continue to go higher right here with respect to the RSI. So we're seeing a similar occurrence as we did each time in the past, where I have these green trend lines on the RSI and the price. So assuming we continue to go down from here and we don't go any further from this point on, we're going to continue printing a bullish or a bearish divergence. If we don't do that, we'll continue to go lower through this range. I believe probably quickly, if I had to guess, come back down to this lowish range we've been setting. And then if we continue to do what I just mentioned about the 2008 crash, we would continue to probably pretty steeply drop off into this bottom range we would set leading into around, as I said, like halfway into next year, maybe towards the end of next year. And this one I just have on the 4 hours, just a more clear time frame to show. Again, we'll see on here we start getting our turquoise, our vector candles up here. We're denoting the highs. We've gotten this, as I said, getting a bearish divergence up here. We saw it denote our high back here. We get our pink candles with the low. Another pink candles right here. We got our W right there. Gonna get those same candles as well. Kind of just denoting where a reversal is likely to occur. But outside of that, here to get to the websites of the altcoins I went over. First off here is Fantom. And this has been dubbed as an Ethereum killer by some, which it could likely be so. But the first thing I'm going to do is I'm just going to play this video that they have here on this website.
The problem with previous blockchain platforms is that they are based on older technologies that don't scale. With Bitcoin, you have to wait 30 to 60 minutes at the store for the payment to clear. With Fantom, your payments are received faster than you can swipe your credit card. Fantom is a network of custom blockchains designed for speed, security, and scalability. These features allow users to create applications that can be used in the real world, such as payments, central bank digital currencies, storing sensitive medical data, and much more. How? Fantom fixes the issue at the root with Lachesis, an innovative consensus mechanism and the engine that powers the blockchain. Lachesis is much faster and cheaper than previous technologies, but still extremely secure. The combination of speed, security, and scalability makes Fantom perfect for banks, governments, and other organizations that haven't been convinced by other blockchains. With Lachesis at the core, thousands of networks can be deployed on Fantom with no compromise in speed or security. Each network can be customized to specific needs, forming a fully decentralized ecosystem, all secured by staking FTM. Whether you need a private network for sensitive medical or financial data, or a public network for verifying the results of an election, Fantom makes it a reality. We believe everyone should be part of that reality. Create your future.
The video just feels very dystopian to me, but which I guess that brings me into, which I'm going to quickly just say it. I do believe blockchain can be a very good thing for humanity, but I also believe that it will ultimately be used for the wrong purposes as time goes on. There may be a period where society lives at least a semi-prosperous time period under kind of the next revolution that we're going into, which, if you're not aware of the World Economic Forum and things like that, and the Klaus Schwab's Fourth Industrial Revolution and blockchain being a part of it, along with many other things, if you're not aware of this, what I'm talking about, I recommend looking more into it. But I personally believe that at some point in time, all this blockchain stuff will be used more for global tyranny more than anything, which I think is why it's important to kind of stay informed about the right things. But the last thing that I wanted to go over here for Fantom was I wanted to go more into the lack assist, so their consensus mechanism they emphasized in that video. So here I'm just going to read this out. Lack assist is Fantom's asynchronous Byzantine fault-tolerant consensus algorithm. Simply put, a consensus mechanism is the engine that powers the blockchain. Compared to classical and Nakamoto consensus, lack assist is a faster, more scalable, and more secure choice. Developers can use lack assist to build peer-to-peer applications without having to create their own networking layer. Lack assist is asynchronous. Participants have the freedom to process commands at different times. Leaderless, no participant plays a special role. Byzantine fault tolerance supports 1/3 of the faulty nodes, including malicious behavior. Final, lack assist output can be used immediately. There is no need to wait for block confirmations. Transactions are confirmed in 1 to 2 seconds. We created lack assist to overcome the limitations of previous consensus algorithms. It is in fact the ideal option for applications that need high throughput, fast finality, and bank-grade security. In today's fast-paced world, anything that requires a wait or delay of any sort would simply not be used. Lack assist removes the barrier for creating fast, decentralized applications that anyone can use, whether you're building an improved version of existing products for sectors such as payments, supply chain tracking, healthcare data storage, and more, or revolutionizing an up-and-coming industry like DeFi. Lack assist can do it all. Consensus algorithm. The consensus mechanism is the core of distributed technologies in a decentralized environment where no central entity validates transactions. The consensus protocol ensures that all the participants of the network achieve an agreement. The network as a whole validates transactions in a fully trustless way. And to deviate a little bit, I've seen people in the past, like on Twitter, say that like global tyranny can only be facilitated through the fiat system, and that through the blockchain system, so Bitcoin and obviously everything I'm going over in this video, cannot be used for tyranny and basically just governmental subjugation. But I don't understand how anyone personally, how you could come to that conclusion, because I think it depends upon the intentions of somebody using whatever technology or thing in the world that they're trying to use to create some sort of effect. If they're going to use it with bad intentions, it's going to have bad effects. And I think it's pretty clear that even though it's decentralizing things like that, it's pretty clear that blockchain can be used to track and surveil things. And it's obvious that the space it has some bad actors in it. But outside of that, to continue, classical consensus protocols were created long before blockchain. They've been used since the 1980s in distributed databases. Byzantine fault tolerance is the ability of a distributed network to achieve consensus, therefore to continue to operate despite incorrect information or malicious participants within a network. Before Bitcoin, the only way to maintain Byzantine fault tolerance in a distributed network was to limit the number of nodes. Practical Byzantine fault tolerance is a model to reach consensus by enabling many computers to behave as one, a technique known as state machine replication. The nodes reach consensus about a decision, such as the validity of a block in the case of a blockchain, by passing messages amongst each other about the decision. In this system, security increases with the number of honest nodes. The honest nodes agree on the correct decision and reject the incorrect decision proposed by malicious nodes, as long as the number of malicious nodes is less than 1/3 of the total. So to break that down, you can think about a blockchain, again, as I said, nodes. So think about if you were to imagine in your head, or just even in front of you if you can, just like a ball of yarn, like a really complex loop. Like imagine if you were to like loop yarn around a donut, or just like I said, imagine a ball of yarn, and on that complex loop, the ball of yarn, there exists dots which act as nodes, and those nodes through the network of the ball of yarn communicating with each other. So basically, Byzantine fault tolerance is just basically, we'll just say in this case, software that's built into the yarn that mediates basically the fact that the ball of yarn has been knotted up along that line. And to take it even to another analogy is you can think about like the solar system, and everything is basically spiraling around a black hole, and then you can take that further to the intergalactic network, spiraling around a black hole. If you know what a Hopf vibration is, a Hopf vibration, you could look that up if you want, or I might show one on the screen right here. But basically, again, it just looks similar to like if you were to wrap a coil around like a donut, and again, you put nodes around that. You can think about the nodes as black holes. The universe as a system of black holes or nodes. They need to be communicating, and the nodes, basically the black holes, don't need to be malicious, because if the black holes are malicious, then galaxies would be chaotically colliding, and the universe wouldn't exist stable enough for life to exist. So basically, hopefully what can be gathered for me breaking this down is that the nodes just have to basically, obviously not be malicious, they have to be operating correctly, and then if over 1/3 of the nodes, so basically if enough percentage of the black holes like in the universe aren't functioning properly, then the universe is not going to exist. Same thing for the blockchain as a whole, which goes back into how Jack Mallers was talking about physics being very relative to Bitcoin and just blockchain in general. But again, to continue, practical Byzantine fault-tolerant systems are energy efficient. They do not need high computational resources or a lot of energy to operate. Furthermore, practical Byzantine fault tolerance can reach consensus at a fast pace because all the nodes are in constant communication with each other, and there's no need for multiple confirmations. Transactions are finalized as soon as the nodes agree on a decision. The consensus achievement can be simplified in 4 steps. PBFT uses a voting mechanism to elect a leader node in a round-robin format. The leader initiates the decision and broadcasts it to the secondary nodes. All the nodes, both the leader and the secondary nodes, send a response. The response is considered valid when 2/3 of all the nodes plus 1 node send the same response. If the leader acts maliciously, it can be removed by the majority of the votes or the nodes. However, constant communication is also PBFT's Achilles heel. It only properly works in networks with a limited amount of nodes. The communication overhead increases exponentially with every new node that joins the network, and so does the time necessary to respond. PBFT networks are also vulnerable to Sybil attacks, where one entity assumes multiple identities. The networks become more resilient to such attacks with a high number of nodes. However, with a high number of nodes, the performance decreases as seen above. Nakamoto consensus. Satoshi Nakamoto designed a consensus mechanism that would solve the scalability issues of classical consensus. Nakamoto consensus is a BFT model created to operate in peer-to-peer networks with thousands of nodes, favoring decentralization and security. The model eradicates the communication overhead by introducing proof of work, which, I guess to break down proof of work, is basically you can think about like coal miners, but it's being done by your computer, by mining electricity, and you get paid with Bitcoin instead of basically when you're mining, you get paid in coal, which is obviously worth value for other things. But despite the improvements, this model can introduce proof of work introduces other issues. It requires all the nodes to solve complex mathematical problems, which consume an enormous amount of energy, akin to a large number of people mining, giving off just natural human energy while they're mining their coal. Proof of work has a very high time finality and a low throughput. In the case of Bitcoin, a new block is produced every 10 minutes by design. It's safe to wait 3 to 6 block confirmations around 30 to 60 minutes before considering a transaction finalized. In classical consensus systems, a transaction is considered final within seconds. Asynchronous Byzantine fault tolerance is the highest standard of consensus algorithms. It solves the blockchain scalability trilemma, according to which only 2 of the following 3 components are possible at the same time within a blockchain, which are decentralization, security, scalability. An ABFT consensus protocol allows for maximum decentralization, high scalability, and bank-grade security. In an ABFT network, nodes can reach consensus independently conveys this information, and they don't need to exchange finalized blocks. For this reason, ABFT consensus mechanisms are completely leaderless, increasing security. There's no round robin and no proof of work. Unlike PBFT, which relies on the fact that all the messages shared among nodes will eventually be delivered, ABFT allows for messages to be delayed or lost altogether. Besides making networks particularly resilient to DDoS attacks, ABFT also lowers the transaction's latency, resulting in a faster network. Finally, ABFT networks allow for greater scalability and decentralization, since there isn't excessive communication to limit the number of participating nodes. Lachesis is a DAG, which is an undirected acrylic graph based ABFT consensus algorithm that offers tangible improvements over both classical and Nakamoto models. Lachesis is asynchronous, leaderless, and final, while also being Byzantine fault tolerant. Lachesis is designed to plug into applications written in any programming language easily. Developers can focus on building the application logic and integrate Lachesis to handle the state machine replication aspect. Lachesis connects to other Lachesis nodes and guarantees that everyone processes the same commands in the same order. To do this, it uses the peer-to-peer networking and DAG ABFT consensus algorithm. Each Lachesis node stores a local acrylic-directed graph composed of event blocks, each of which contains transactions. The DAG capturing the happens before relationship between the events is used to calculate an exact final order of said events and hence transactions independently on each given node. Each block or event blocks are divided into confirmed and unconfirmed event blocks. New event blocks are unconfirmed, while event blocks from the 2 to 3 plus frames are all confirmed and subsequently ordered by honest nodes. Consensus results in batches of confirmed event blocks, where each batch of events is called a block. Finalized blocks forming the final chain are calculated from event blocks independently on each node. Unlike proof of work, round robin proof of stake, coinage proof of stake, and sync BFT, Lachesis nodes don't send blocks to each other. All of the events are being synced between nodes. Validators don't vote on a concrete state of the network. Instead, they periodically exchange observed transactions and events with peers. Unlike classical consensus, such as PBFT, Lachesis doesn't use new events in the current election. Instead, new events are used to vote for the events in 2 to 3 plus previous virtual elections simultaneously. This leads to a small number of created consensus messages, as the same event is reused in different elections. Hence, Lachesis achieves a lower time to finality and a smaller communication overhead compared to synchronous BFT. Lachesis' event structure is a DAG of events to optimize storage and retrieval. The DAG is separated into sub-DAGs. Each of them is called an epoch. Each epoch compromises many finalized blocks. Each epoch is sealed when one of these conditions is satisfied. The epoch reaches a defined number of blocks. The epoch lasts for a specified time. At least one cheater is confirmed in this block. Epoch sealing is requested by the node driver contract. When an epoch gets sealed, its inner epoch indexes get pruned and new events of the sealed epochs are ignored. Each epoch forms a separate DAG, and thus parents from other epochs are not allowed. For sanity check, each event includes the hash of the previous epoch. So that's all that I wanted to go over here for Fantom. I'm not really going to read out as much as I did on this website as I did, or I will on most of the others, except for maybe Jasmy, because I feel like that one's there's a lot on there to read that's pretty important about it. But I feel like this will get a very general, just a pretty good overview of consensus mechanisms. Talking about PBFT, just BBFT in general, proof of work, and things like that. And also, as you saw, you'll see this kind of interconnected network again, bringing that back to nodes and the black hole connection. And also, as I said, if you want to think about it more simply, it's kind of just like a ball of yarn with dots. Just imagine in your head dots on it. Those again would represent like nodes or galaxies. They all have to work together in unison, sharing information through messaging in order to make sure the system is behaving as it should, and things along those lines. The thing that I wanted to read here on this was actually, this mainly was just gone over one I just read, so I'm actually just going to skip that. But here for Theta, which I'm going to have the links for all of these, so the websites and these white papers in the description if you want to go to them and read them yourself. Because obviously I'm definitely not going to read all of those in here. But here for Theta, again, we'll see kind of these similar graphics on a lot of these websites. We'll see these points or these cruxes, again, representing, if you want to think about it in a physical analogy, like the intergalactic network with black holes and galaxies. But Theta is basically the leading, as it says here, the leading purpose-built blockchain for video, media, and entertainment. Theta infrastructure enables media platforms to drive user growth, while reducing content delivery costs by 50-70% or more, all powered by 100,000 plus community-run edge nodes sharing their storage, compute, and bandwidth. Theta is fully compatible with EVM and Ethereum smart contracts, enabling a wide range of Web3 applications, including NFTs, decentralized exchanges, decentralized autonomous organizations, and more. And they have a lot of partners listed here on their website as well. Clayton being another crypto-based project. Decentraland, Mana, Chainlink we see here. Again, we'll see this similar graphic right here. They just released their meta chain at the beginning of December. Right here it says it's an interconnected network of blockchains. Again, just going back to the analogy I've been giving recently. A chain of chains. You can almost think about it like, imagine the center of the universe being this point right here, where all these are stemming out from. If I were to flip this upside down on itself, kind of just mirror it across the x-axis upwards, and then connect it, kind of like going roundwards like this, like a torus, if you know what that is, or again, like shaped like a donut would be the simple way to think about it. It would make it, as I said, a toroidal shape, kind of like this interconnected, intergalactic, as I've been making as the analogy, network that's communicating with itself and maintaining stabilization so it performs as it should. But as it says here, it's going to allow permissionless horizontal scaling of the Theta blockchain network in order to achieve potentially unlimited transactional throughput and sub-second block finalization time. This enables a customizable, highly scalable blockchain tailored for emerging Web3 businesses in the media and entertainment space. Again, we see some more partners down here. Going over most of these down here at the bottom, we're talking about NFT things. They've used, like American Idol's on one of these pages, I forget which one it is, but you see G Fuel right here. I don't know most of these other ones. We go down here, we'll see Katy Perry did, I think, some NFT stuff, American Idol, Sony. There's a lot of good partners here. I think obviously the technology that they're providing is going to be very prosperous once this technology gets adopted again, hopefully in a good way. As I said, my thoughts on it, or my general thoughts of where humanity's heading is rather grim. At least that's what I think is most probable. I mean, I personally think that the world is going to end in the next 50 years, within the next 50 years. So that's just my input. But another thing that Theta is trying to do is basically, it's associated with Web3, as you can see right here on this white paper for their mainnet. But it also is kind of looking in terms of like a YouTube sense, to give like an example. Looking to give more of the money back to the content creators rather than YouTube taking a lot of the money for themselves right now. It being more centralized, obviously, is just an aspect of decentralization. If blockchain gets effectuated and actualized in society in the better way, then it would give more power back to the people, which is what we would hope would happen. But what I wanted to go over here on this mainnet paper that they have is they have a nice vision for Web3 businesses, and I feel like this just goes for all Web3 things, which some of the other ones I'll go over shortly are Web3 as well. But what it says is Web3 promises to be a revolutionary technology and a decentralized approach to next generation application development. However, the vision for Web3 businesses is far broader. It's just a set of tools and technologies, just like the advent of the internet in the late 1990s revolutionized how people around the world communicate and interact with each other. New online models emerged at that time that completely displaced existing businesses. Case in point, Blockbuster at its peak in 2004 employed over 80,000 people in nearly 10,000 physical stores as the largest home movie and video rental service. And then Netflix began experimenting with mail order service in the early 2000s. By 2007, introduced one of the first streaming media and video on-demand services. Netflix eventually put Blockbuster out of business because it completely changed the business model and the economics of video rental services. Web3 tools and technologies today are like the internet in the early 2000s, which again, as I mentioned, I personally feel like blockchain will be just as revolutionary as the wheel, and how much it could potentially, and again, as I said, as we all hope, point humanity in an evolutionary path for the betterment. But Web3 will enable a new category of media, entertainment, and metaverse businesses to emerge, built on a new set of business economics and models that are community first, decentralized, and controlled by creators, IP holders, and the users themselves, not the platform. Again, going back to YouTube, as I mentioned, or even like Twitch or other things along the video streaming services that we're already aware of right now in the current Web 2 that we'd be in. And then leading into that, Web 2 businesses, as I mentioned briefly already, capture around 80% of the value created by their platforms in the form of corporate profits, leaving only 10% to creators or IP holders and 10% to users. New Web 3 businesses can thrive and scale by 10x and keep 20% of the value created to themselves. In the end, they're still 200% more successful and have the potential to completely displace today's current Web 2 businesses. This is the vision for Theta's upcoming mainnet 4, which has already been released on December 1st. But in order to enable Web3 businesses and media, entertainment, and the metaverse to scale to 10x today's platforms. Theta Network continues to be the leading next-generation video, media, and entertainment blockchain since launch of mainnet 1 in 2019, backed by global enterprise validator partners such as Google, Samsung, Sony, the Creative Artists Agency, which just deals in general broadly with like directors, as it said, artists, just in general, things along those lines. It's kind of like influencers in a way, I guess would be like a modern term to think about it. But Binance, Blockchain Ventures, DHVC, and Gumi. Strategic corporate investors in Theta Labs include Samsung Next, Sony Innovation Fund, Bertelsmann Digital Media Investments, CAA again, and Silicon Valley VCs, including DCM and Sierra Ventures. So there's a lot going behind this. Again, as I said, they're pretty much just think about how Netflix revolutionized things. This is what that is, but I believe like on steroids are just infinitely better, personally. Next here we have Polygon, which this is another Web3 application. It's basically built with a direct respect to Ethereum in order to scale it, as it says on here. The easiest way to scale your Ethereum app. Ethereum scaling solutions with over 1.3 billion transactions recorded, 130 million unique wallets, and approximately 2.7 million monthly users. Polygon Proof of Stake is the most proven scaling solution in Web3 and the best way to launch a Web3 project that's ready for a global audience. Here we can see scale and power. POS is a solution that achieves unprecedented transaction speed and cost savings by utilizing sidechains for transaction processing at the same time. POS, or Proof of Stake, ensures asset security using the robust plasma bridging network and a centralized network of Proof of Stake POS validators. Basically what it means by these side chains that it's mentioning. I don't know if they have here. So here's the so you have the root chain, which should basically be like, Ethereum, as it says, Ethereum mainnet up here. Then through these plasma checkpoint nodes, kind of just being like as a bridge or a link point between the Matic side chains. It's kind of like, in a way, funneling, as it says, I'll read up here, Polygon scalable proof-of-stake architecture complements Ethereum's decentralized security surging. You have the ability to create apps that can appeal to the masses while maintaining the power of decentralization. Kind of just funneling processing through here, through the sidechain to also, as it says, make it more scalable, as you said, make it more fast, flexible, and just kind of more cost efficient as well. One of the main things I wanted to read on here was this right here for the Polygon proof of stake that they talk about. It's going to click on it. I suppose. Is that what I'm already on? It is. Okay, yeah, so I didn't notice that. But that's pretty much what I wanted to go over for that. Also wanted to go over this Polygon ID thing right here as well, because they had a nice little video. But basically, as I'll read out, the right to identity is the right to freedom, a self-sovereign private identity solution. Polygon ID is a blockchain native identity system with programmable privacy that empowers people and enables the creation of trusted interactions with Web3 services. You can also think about, again, this is kind of a revolution of the internet, almost like a rebirth in a way. And the metaverse, even though it's kind of had a shoddy existence at this point, the technology is still relatively new, immature, I suppose, still being adopted, obviously. But again, going back to the predictive programming stuff that I talked about earlier, with I'll go back to movies like Ready Player One being more recently, Transcendence with Johnny Depp in it, kind of just where you upload your consciousness to this, like the cyberspace basically, which I believe that's what blockchain is I described it as the intergalactic network analogy for the universe. the neuronal structure of the brain is also very similar to the structure of the universe we've seen in our current researches. Also, it's just very similar, as I said, to the way a blockchain network operates, as I've already given that analogy. It's basically just a system of nodes, or you can think about it as neuronal, or like neuron terminal points, where and then it goes throughout the network of the brain where messages are being communicated back and forth. And basically what I think a blockchain is I think it's the brain, but we have to somehow figure out how to program software consciousness into the hardware. So basically create a robot, make a brain, hardware wise, has to have blockchain like capabilities and things along that nature, but we have to figure out how to engineer consciousness, basically, which is kind of where I believe we're stuck at. So what I'm getting at this point is how it talks about Polygon ID and how CBDCs, if you're not aware of those, are centralized banking digital currencies, which you don't want to use because it defeats the purpose of what blockchain is on the good aspect of it, which leads us down the tyrannical aspect, which I've been talking about, where the governments are going to know everything about you. They'll be able to control how much you buy and spend. You'll have to have this in order to buy and sell, which brings me to the Bible. I myself am a Christian, so I'm going to intertwine this because I believe this is what this stuff is being used for. I believe that it's going to be used for end-of-world purposes. As I said earlier, there may be a period of time in which humanity prospers under blockchain solutions, this kind of like technological singularic revolution I believe that we're going through. Although I don't know, I do think, as I said, the world's going to end in the next 50 years. But anyways, I'm going to get off of that tangent of mine and just play this video right here.
As the boundary between our offline and online lives continue to blur, the significance of one's digital identity is becoming more and more apparent. Currently, it's difficult to prove your identity without revealing sensitive, private information. Polygon ID offers a decentralized, self-sovereign, and privacy-focused identity management solution for Web 2 and Web 3, powered by zero-knowledge technology. It enables users and enterprises to maintain privacy and retain full control over their digital identity. Thanks to zero-knowledge proofs, everyone using Polygon ID can prove any aspect of their identity on-chain without having to disclose personal information. Where can you verify your identity with Polygon ID? The answer? Pretty much everywhere. Moreover, differently than centralized identity management solutions, it allows any user to create zero-knowledge claims, guaranteeing freedom of expression for users, issuers, and verifiers. Polygon ID lays the groundwork for societal transformation by providing a platform that makes freedom of expression, digital inclusion, and programmable privacy finally possible. The future of digital identity is here. Stay tuned for more.
And obviously they went over
the
good aspect. If we do go down the right route, things will be more privacy focused. As I said, we'll be more self-sovereign people, individuals. I'm personally anti-government. I don't think that humans will ever live without it, like a human-based government. I don't think people... the only reason we have a government is because some people just don't know how to be moral, ethical human beings, which is the unfortunate case of the world that and the reality that we live in. But as I mentioned earlier about dystopian vibes, going back to the Fantom video that I played being kind of similar to this one. But if anybody's watched Black Mirror, given that it's pretty popular, I don't know if it's the first episode in the first season, but it's just the episode where they have the social credit app on the phones, and society is dictated by that. And that's what China's trying to do right now, and that's what blockchain can facilitate if it gets taken down that route and being completely controlling of the citizens within a body, whether it be a country, a nation, or global regional sectors, and like a global one-world order, if you want to put it that way. But here, what I wanted to read out on this Polygon white paper, the vision that they have, that they envision an open and borderless world, a world in which people and machines collaborate and exchange value globally and freely without gatekeepers or intermediaries, a world in which communities thrive unconstrained by artificial borders and archaic regulations. They will strive to empower everyone to effortlessly join this new world, this better world, as they say. Again, this is kind of just an image linking how Polygon being connected to Ethereum kind of being an extension of it in order to be scalable, things along those that nature. Then it kind of just goes into their team right here. It's an open source project, which is very good. All of these that I am going over, by the way, which I haven't mentioned it already, that every single one of these are open source, which is a very good thing to see as well. That's all I wanted to go over there for Polygon. Again, I'll have all these linked in the description if you want to go over them more yourself. But here for XYO, this is the coin that I have been mostly interested in my researches into blockchain and looking into other coins outside of Bitcoin. I believe this is going to, well, at least it has the possibility to be one of the most far-reaching and most diverse cryptocurrency, like blockchain protocols, initiatives, projects. Because it's a physical reality oracle, and that they are basically through their technology, which I'll read right here, shaping the future of global data. XYO is a technology protocol designed to improve the validity, certainty, and value of data. We are building a data marketplace that gives users a gold standard for any apps, websites, and blockchain technologies that rely on trusted data. As I said, first reality or oracle, physical reality oracle, the bridge between secure blockchain data and our physical world, which is something they're doing is mapping the metaverse in terms of mapping what we see with your actual biological consciousness that you're watching this video with right now. That data is going to be mapped into the blockchain via XYO. And then, as I said, going back to like Ready Player One, we'll be able to eventually simulate, if the world gets to this point, things don't collapse beforehand, or we don't all get tyrannically subjugated beforehand, we'll be able to, hopefully in a numerical, ethical way, use this technology and not outside of, using it in the wrong way. But to continue, XYO improves the certainty and trust for data and ensures people rightfully own the data they create. We're building the technology needed for a fully data-driven world. I mean, this even could get to the point, like, of smelling things. Like, that's how realistic it could get. It just depends on how long humanity has left. But here, their network is broken down into 4 components: Sentinels, bridges, archivists, and diviners. Together, the components provide a fully decentralized network capable of combining cryptographic security, real-world data. So we have our Sentinel right here. Again, as I said, they're kind of creating a mesh, like framework structure. I don't know if they really have it anywhere. It might be on the home page or right here, but I don't really have it too much on here. But going back to even the Theta image that I showed on here, how having this like interconnected network, again, you'll see pretty much this imagery just about everywhere. We saw it on Polygon as well. You also see this similar like spiral, the infinity sign, like even like gosh, I forget the name of the trefoil knot, basically like the Trinity is basically that geometry. And then you'll see this is basically the torus that I was showing. This is more like a cylindrical torus, the shape that they have up here, the internal part, so like it diverging from the center point downwards. If you were to cut it off like right here in this area on this circle, then take that out, it would look like an hourglass, which is like as a hyperboloid geometrically in terms of that, which again just ties back into the physical aspect, the physics, how Jack Malice was talking about earlier, and how I've talked about, again, with the similar imagery being brought back to like galaxies and things like that. But so here for the Sentinel, it is a physical device like a smartphone, which they have an app called Coin, where you basically, it's like kind of like Sweatcoin, if you know what Sweatcoin is, where you just walk around and you get rewarded coin on the website. With this coin, you can exchange that for XYO and other things. But so this physical device broadcasts a signal with its location and other data like time or the temperature. When the Sentinel is near another Sentinel and they broadcast that they are near each other, this interaction is proof of the Sentinel's location. So again, that's basically saying like it's not validating itself. It has to have validation of at least right here. It just said of another Sentinel within some sort of radius around it to also confirm as well. Connecting bound witness data to the archivist, a node in XYO that looks for bound witness interactions. When the bridge node finds an interaction, it signs off on it and sends it to the archivist. So basically think about like an archivist like as like an archive of information, like a bookshelf of like books. Basically, it's where it sends information to sit to continue the proof of origin chain. All of these bound witness interactions are stored on an archivist. Currently, you can see the bound witness data stored by an archivist and tied to a specific bridge public key on our Explore app. A bridge node operates from a variety of devices, most notably a BridgeX device and or smartphone, Android or iOS. They also have like little, like, I believe it's another physical thing they can have sent out. It like also tracks, like you could put on a pair of keys, it tracks your keys, given this is like a physical oracle, as I said. Did I read about the bridge? Here for the diviner. Getting answers to your questions. A node on XYO that answers questions using bound witness data. This is a question that relates to location and will be asked by either an individual or a program. So something seeking to know some sort of information that this blockchain is taking, in case of like physical data, real world data, things like that. This question could be like, did some event happen at XYZ location? It can ask the archivist or bridge directly for the data that it needs for an answer. It can ask the bridge because bridge will then go to the archivist, you know, acting as a bridge of information basically. So, and like this is, they're partnered with FedEx as well. Microsoft is a partner. They're partnered with Chainlink and a bunch of, they have a lot of good partners like most of the other ones I've went over in this video so far. It's also, again, open source, as I mentioned, all of them were. But outside of that, here on this white paper, I wanted to read this proof of location. So this consensus mechanism that this one uses. The concept of provable location has been around since the 1960s. And actually, before I get into this, I mean, this can revolutionize GPS location services as well. And what I was mentioning about FedEx and how track packages with respect to the blockchain ever being lost again and things like that. Going back to that question that was asked on the previous page I was on. But the concept of provable locations, again, since the 1960s, can even be dated back to the 1940s with ground-based radio navigation systems such as LORAN. Today, there are location services that stack multiple mediums of verification on top of one another to create a proof of location through triangularization and GPS services. However, these approaches have yet to address the most critical component we face in location technologies today, designating a system that detects fraudulent signals and disincentivizes the spoofing of location data. For this reason, we propose that the most significant crypto location platform today will be one that focuses most on proving the origin of physical location signals. Surprisingly, the concept of applying location verification to blockchain technologies first appeared in September 2016 at Ethereum's DevCon 2. It was introduced by Lefteris Karapetsis, an Ethereum developer from Berlin. Karapetsis' project, Sikorka, enabled smart contracts to be deployed on the spot in the real world using what he termed proof of presence. His application of bridging location in the real world of blockchain focused primarily on augmented reality use cases, and he introduced novel concepts such as challenge questions and proving one's location. On September 17, 2016, the term proof of location finally surfaced in Ethereum's community. It was then further expounded upon by Ethereum Foundation developer Matt DiFronte. As he said, proof of location you can trust is honestly one of the most difficult things to implement. Even if you have many participants that can attest each other's location, there's no guarantee that they wouldn't just go civil at any point in the future. And since you're always only relying on majority reporting, it's a huge weakness. If you could require some type of specialized hardware device that has anti-tamper tech, such as the private key is destroyed, such that the private key is destroyed when one attempts to open it or change the firmware on it, then you could possibly have greater security. But at the same time, it's not like it's impossible to spoof GPS signals either. A proper implementation of this requires so much fallback and so many different data sources to have any assurance of accuracy. It would have to be a very well funded project in order to do so, as he said. Basically, this is how, I believe it was Theta that mentioned, talking about the vision for like Web3 businesses. You can think about XYO as being kind of like the Netflix of like the like location services, GPS, things like that, which is another very profound introduction into the technology within that space. But here for VeChain, this is kind of like an enterprise blockchain, like a business one, really, kind of being more geared towards like the adoption in terms of like just in general storage of information with respect to like a society. Again, like I said, businesses or like just like operations, even I would suppose hospitals and things like that. Kind of going back to like Fantom could do as well. But Here it says for VeChain is the public blockchain that drives its value from activities created by members within the ecosystem solving real-world economic problems. Here they also have a video.
We are controlled by the few, the powerful, and the greedy. We should be free. Free to choose, to trade, to create. It is time for a new world. A world founded on safety and security. A world where everything you do creates power. Power for all. And you will decide the shape of this world. The power to change the future is in your hands. VeChain.
If we actually go back, this looks a lot like Tron. Again, we could go back to like the predictive programming thing that I was talking about earlier. And also going back, you see these kind of just distributed networks right here. You see this kind of octahedron.
A world founded on safety and security.
Just again going back to the analogy.
A world where everything you do create.
But anyways, again, kind of just you see how everything, like even the buildings are forming almost like out of technology, like a software, like the Matrix literally. Also in Matrix will be another great example of this as well, in terms of like I said, predictive programming. But I mean, pretty much everything at the end of the day, especially I mean if you look at like physics, everything is kind of just a massive computer. I'm not saying that reality literally is a computer like program, like an algorithm being ran, but at the end of the day, everything in front of us is just like electromagnetic like data in terms of like frequencies and just a vibration of the medium that we're in, which just very heavily connects to that. Here we see VeChain's vision, which VeChain believes that blockchain technology is one of the foundations of the next generation of information technology, alongside emerging technologies such as AR, which is artificial reality, virtual reality, or augmented reality, not artificial, virtual reality, artificial intelligence, Internet of Things, 5G, and more. With the technology's immutable and tamper-proof characteristics, blockchain, as an infrastructural technology, is uniquely positioned to enable unprecedented value and data transfer among a wide set of users in a trustless manner, boosting the efficiency and authenticity of information transfer itself. VeChain's vision of lowering the barrier and enabling established businesses within blockchain technology to create value and solve real-world economic problems has been clear to us from the very beginning. To achieve and fully harness this technology will enable mass public adoption. We will have identified three major phases of blockchain involvement: technical consensus, business consensus, and governance consensus. These phases will be the founding and strategy to enable the VeChain 4 blockchain to be adopted as the world's premier choice of blockchain. So basically what they're kind of saying there is like the blockchain that, like the prolific blockchain, like the Microsoft blockchain, or like the Sony. Obviously, that's the thing. Which again, I feel like goes into my grim outlook, which I feel like is we're inevitably heading this way anyway. Where like I ultimately like this is just duping us. Eventually, I think this is going to be used to bring in the most heavy form of centralization that the world is ever going to see. Which I said it doesn't have to go that way. There may be at a period of time where humanity prospers, like for a golden age right before things go absolutely haywire and terrible. But I did honestly 100% believe and would go as far to say it's a fact that this blockchain technology will eventually be used for some of the worst tyranny we've seen in human history. But here for Jasmy, what I find interesting about this is it says decentralized data democracy. It's basically like whenever you go to like a website, this is an example, like when they ask you for your data, like your cookies, just data, this website's accessing your data, like Apple having access to like data on your phone, just things along that nature. Companies, businesses, like even like TikTok, for example, tampering, not necessarily tampering, but having access to like a lot of the data on your phone that most people aren't aware of. Things like that. This brings democracy, as it says, to your data. Let's see if I can find the image real quick, but it's basically, you will now, people will like basically send you a request to have access to your data, or like just basically buy it off of you in a way. But we can see right here, so somebody's sitting at their laptop, let's say it's an IoT device laptop with full blockchain integration, even has like a hardware wallet built on it, right? And somebody, I don't know, wants to access this person's data, they have to accept it through the Jasmy ecosystem, sends it to a personal data locker, which you can think about this is like the archivist for XYO where the data is stored. We have the bridge right here basically. We go to, this basically represents like an interaction. The merchant pays you right here, as you can see connected diagonally right here with the access to your data. Now they give you Jasmy coin. So basically, like you could even, depending upon how badly people want access to your data, you could live off of this. Which also brings it into how blockchain, I believe, can completely, if we go down the good route, alleviate world hunger, world poverty, like outright, 100% get rid of it. But I don't think that's ultimately what it will be used for, unfortunately. But that's basically the consensus of Jasmy. It's very heavily associated with IoT devices, obviously, because eventually, like even your speakers, everything can be an IoT device, as long as it just has to simply be, even your car, like, as stupid as it sounds, like my USB dongle that just gives me USB ports could have blockchain integration, which I guess maybe that's not even stupid. You could think about it as like, for example, think about it like a USB drive, right, that has a bunch of data on it, is also connected to like a cloud because it's like a blockchain integrated product, hardware device that like just gives you another layer of like storage or just protection. You know, so you're in case like the USB stick or something gets corrupted, just something along those lines. But also what I wanted to go over here for Jasmy, that was mainly it. The last thing here is the team introduction. They have a very good, this white paper. A lot of these people are former Sony, you can see right here. Former CEO of Sony, former president and COO of Sony. This guy down here was president of Sony. Basically, a lot of people that left Sony and started to create this project as well. Again, this one's open source as well. And as I've been saying, I will have all of these linked in the description of the video. That was again about all that I really wanted to touch on in this video. Hopefully you guys enjoyed, and I hope you all have a blessed day.